In the global space, we see a fresh round of high-stake talks and negotiations between the United States and Iran wrapped up on Thursday, with both sides reporting significant progress in efforts to resolve a long-running dispute over Tehran's nuclear program. Though no final deal has been reached yet and major differences still remain. The indirect talks held in Geneva under the mediation of Omani Foreign Minister focused primarily on curbing Iran's nuclear activities in exchange for relief from crippling U.S. sanctions. After hours of discussions, the minister described the latest session as constructive and said that negotiators would consult their governments before resuming further technical level talks next week in Vienna. At the close of trade yesterday in the United States, our correspondent in Washington, Maria Beth, put together how the color of the markets was.
The U.S. stock market struggled on Thursday as the Dow Jones was just above flatline, while the S&P 500 dropped at 0.6%, and the heavy-tech Nasdaq was down at 1.2%. Many investors were watching the tech industry and hopeful that it could pull out the day, especially the Nasdaq, which saw the greatest loss. This was a major turnaround after Wednesday's major wins. Many investors are still watching to see what could happen, as there is this back-and-forth relationship between the AI industry and investors, as there is some concern about the disruption of AI and what it could mean for the U.S. economy. But investors are still hopeful and looking forward to the end of the first quarter, which will happen in just a few weeks.
And in a dramatic turn in one of Hollywood's most closely watched takeover battles, Netflix Incorporated has officially withdrawn its bid to acquire Warner Brothers Discovery, effectively clearing the way for Paramount Skydance Corporation to emerge as the leading bidder in the months-long acquisition saga. Netflix announced that it would not raise its offer to match a revised and higher bid from Paramount Skydance, saying that the price required to stay in the contention made the deal, no longer financially attractive, according to them. The decision marks a significant retreat by the streaming giants from what could have been one of the biggest media mergers in history. And we know that President Trump did intervene in this matter some months ago, so I guess we should not be surprised how it's turned out. Away from the U.S., the United Kingdom is on track to cut government bond sales sharply in the coming financial year, marking the lowest level of issuance in several years. And the UK Debt Management Office is expected to outline its financial plans for the 2026-2027 fiscal year, with dealers' median forecast showing total gilt sales dropping to approximately £245 billion, and that's down from £304 billion in the current year. If realized, the reduction would represent the first fall in overall UK government debt sales in 4 years and reflect efforts to lower borrowing as the government's fiscal position stabilizes and refinancing requirements ease. We move to France, where annual inflation rate picked up more than analysts had forecast in February, but remained comfortably below the European Central Bank's 2% target, reaffirming subdued price pressures in the French economy. According to official data released today, the pace of consumer price rises edged up in February from extremely low levels recorded earlier in the year. The increase reflects broad-based price pressures across key categories like services, food, though overall gains remain well below levels that were seen earlier. And there we go over to Japan, where the latest auction of 2-year government bonds sailed through without any market turbulence today, even as investors are digesting ongoing speculation about the Bank of Japan's future monetary policy direction. The two-year Japanese government bond sale, typically a key barometer of market confidence in short-term interest rate expectations, was met with orderly demand and no unusual pricing moves at all.